asked to talk about what we see in the United States in terms of opportunities going into 2021 in terms of the resources space. Obviously, there's been a lot of commotion in the United States recently due to our elections, and obviously with what's going on a global basis in reference to COVID. In terms of the election, with President-elect Biden looking like he will move into the White House in January, as far as that is concerned in terms of the way we look at the marketplace, I don't feel that he nor if Donald Trump for any reason is able to regain the White House will change the outlook for what's happening in the metals market tremendously. And I'll get into that in more detail as we move forward. But in both cases, there is a critical minerals bill on the floor of the exchange, of the House, sorry, excuse me, that both the Senate and the Congress are bipartisan in favor of. And so, as I said, I don't think that the president's going to have an effect on that. I think it's very important in terms of what they are trying to do in terms of that critical minerals bill, which is also in the relationship that they've developed with Australia and Canada, so that the three countries can work together to focus on what is coming down the pipeline, so to speak, from the creation of electric vehicles and batteries in general, and then the materials that they need in terms of that, and making sure that China does not have a hold on that market for the future. So when you look at that and what it's entailing, that entails rare earths, lithium, cobalt, nickel, tungsten, tin, copper, etc. And so that forms a very good base for where we're going in the future. If what is now looks like is the case with COVID, we have a couple of vaccines coming through, and you're seeing that reaction in the stock market at the moment. People looking through that. Again, then GDP growth for 21, 22, 23 around the world should be pretty good. Most countries are looking to put in place a infrastructure bill. US is one of those as well. And again, I think you'll see that go through early in the new year, which is again, very good for materials, which will be also, we'll see China doing something similar in size as well. I think all that creates a base for what I think is going to be a very good 2021, 2022, 2023 in the mining space, in the metal space. As GDP growth starts to pick up, there's been a lack of spending in the mining space to create more product. I think that needs to change. And I think we're going to start seeing that. I think in the last 6 months, we've seen a pickup in fundraising for mining companies around the world, especially in Australia and Canada. I think most of that would have been seen in the gold sector with the gold price movement, but we are starting to see that now move into nickel, copper, iron ore, and other places. So we believe that this will continue in the marketplace. We believe that there's been an underspend of CapEx by the major mining companies, which I think you're going to see a lot of the mid-tier and the juniors start to perform and move forward with their projects. I think the other major situation that happened recently as well was Tesla's investment underwriting in Piedmont Lithium, where they stepped in and wrote a contract for price as well as volume so that Piedmont can build their lithium mine in the United States. That was written at a much higher price than where lithium is trading at the moment. We don't know exactly what that is, but it was enough for banks to be comfortable to put project financing in place to build out that mine. I think we will see more of that done, especially in these materials, by either the automakers or strategics that understand the need for these products to be built and these projects to get up and running, especially here in the US and Canada. And Australia for that matter, just to move the supply chain and the production of that and facilities to Western world so we are not dependent on China for those products. At the moment, 80% I think of lithium is processed in China. So I think that will be a major change, but I think in general, you're going to see a lot more financing going on, especially out of here in terms of the metals sector. You're seeing a lot of attention because of Tesla given to the battery sector. I think as people flow through and look at what goes into those batteries, there will be more capital from US companies and US investors flowing into the materials going into those batteries. Again, I think that will be a major push that we'll see in 21 and 22. I think we also will see, obviously we're seeing the move in copper at the moment. I think there'll be a very strong emphasis on what's going on in the copper market. Iron ore is remaining strong. China announced last night a record steel production. And I think that will keep a base on the iron ore market as well. I think the one market that will be difficult will be coal. Obviously, coal is still very much needed, but I think that the pressure coming from ESG on the coal, thermal coal, especially industry, is going to put pressure on how those companies get financed. I think we will see a lot more take privates in the thermal coal market as these stocks will not reflect their earnings potential going forward. And so I think the companies looking to build out coal production are going to find it harder to do that in the public market and will move towards private capital in the future going forward. So, I mean, that's the way we see things out of the United States at the moment. We are definitely seeing an uptick in interest from institutions here as well as strategics. If we look at what happened over the last 6 or 8 months in Australia, Canada, the uptick in capital raisings has been tremendous. As I said, most of that in the gold market, but we're seeing that now move to copper and nickel and a number of other commodities. So I think this bodes very well, and I think the next, in my mind, next 2 to 4 years will be very good for the mining sector as we come out of this COVID environment, as well as the growth of the EV market and the battery market in general. So thank you for listening. If anybody has any questions, I'm more than happy to accept those by email. Thank you.